after the Federal Reserve apparently announced a working partnership with Ripple, the company behind XRP. The cryptocurrency world is ablaze in a startling turn of events. This statement, which represents a critical turning point in the continuous integration of digital assets with conventional banking systems, has rocked both the traditional financial sector and the quickly changing crypto community. There have been whispers for years that big universities are investigating blockchain technology. However, this is the first time that such a well-known partnership has been publicly recognized. This development has sparked wild speculation and increased confidence among investors, with many referring to it as the clearest indication yet that XRP could hit $5,000. It is also the result of an incredible $2 billion worth of XRP being moved by whale wallets in a single day. Because of the magnitude of these transactions, traders and analysts are rushing to comprehend the ramifications. Massive movements are therefore uncommon outside of significant market developments. Social media is rife with discussions and speculations about what this might mean for the future of digital currencies, and the enthusiasm is evident. Even if the figure may make naysayers laugh, the world is starting to pay attention as the math starts to make sense. Even some of the industry's most conservative voices are beginning to recognize the possibility for enormous development as financial professionals are increasingly re-evaluating their models. Within the ecosystem of XRP, the pieces of a long-awaited puzzle are beginning to fit together as FedNow documents that claim that XRP's infrastructure might serve as the foundation for the U.S. central bank digital currency, or CBDC, are making the rounds online. As more information becomes available, it's becoming evident that Ripple and the Federal Reserve's partnership has the potential to completely change the global financial scene and usher in a new era in which traditional banking and digital assets coexist. These documents, yes, these are confirmed internal Fed communications, indicate that the XRP ledger and Ripple's on-demand liquidity, or ODL, may be used to provide near-instantaneous high-volume settlements for the future digital dollar. This isn't some tinfoil dream or backroom speculation. In addition to highlighting XRP as the bridge asset that may provide interoperability across banks, payment providers, and CBDC frameworks, the screenshots make explicit references to RippleNet. Take a moment to process that. It's possible that the U.S. government is getting ready to employ XRP as the cornerstone of its financial infrastructure modernization project. The XRP community has been rocked by an unidentified whale's acquisition of an astounding 1.2 billion XRP, which immediately caught the attention of institutional and retail investors around the globe. This particular transaction is notable not just for its magnitude, but also for the secrecy and accuracy with which it was carried out, leading to a great deal of conjecture on the identity and motivations of the move. Over $600 million is the current market value of this investment, a figure that is comparable to the yearly budgets of some small countries and demonstrates the extent of institutional interest now being shown in the cryptocurrency field. Even more intriguing is the fact that these funds have allegedly been placed in a custodial wallet with the promise to not touch them for the next 5 years. indicating a long-term strategic move as opposed to a hasty wager. This whale is not a newbie to the world of digital assets, according to blockchain. Tracking their past transactions reveal a trend of well-thought-out, high-stakes maneuvers. The address has been involved in early-stage Bitcoin and Ethereum investments, frequently joining before significant price spikes and exhibiting a thorough comprehension of market cycles. However, this entry into XRP is unique in both scope and timing, suggesting a change in approach or fresh data that influenced the choice. Analysts are increasingly conjecturing that a significant institutional actor or possibly a state organization may be responsible for this, putting itself in a position to benefit from a potential major geopolitical change in the digital finance sector. The message this conveys to the market is even more remarkable. Being on the sidelines is no longer an option for those with large budgets and long-term goals. The rest of the world is eagerly observing their daring actions. And the statistics back up this zeal. Analysts have many reasons to be hopeful about XRP's future based on recent data, particularly as fresh details regarding supply dynamics and wallet activity become available. Using the recently disclosed wallet data and anticipated lockups, analysts have performed sophisticated supply shock models and found patterns that indicate a quickly tightening market. These models consider future constraints and institutional accumulation in addition to the existing supply. The amount of liquid supply available for trading is decreasing at an unprecedented rate because almost 80% of the entire circulating quantity of XRP is either locked in escrow, held in long-term custody, or controlled by significant institutional actors. As a result, regular buyers and sellers have less access to coins. We're looking at a classic supply squeeze scenario when you combine that with the growing demand from fintechs and international banks who are actively investigating blockchain rails for real-time settlements and cross-border payments. There is increasing rivalry for the available XRP. The end? Although ambitious, a 5,000 XRP price target might not be as unrealistic as previously believed, particularly given the current climate in which institutions are quietly buying the decline. Individual investors are still mostly ignored, and the supply is still running low. There will be significant price movement in the near future. Goldman Sachs is getting ready to open an XRP perpetual futures trading desk the following week, which will only serve to fuel the flames. This is enormous. Although there has long been conjecture over Wall Street's engagement with XRP, this is the first official confirmation of a significant financial institution using XRP into its